Hello everyone, and welcome to the PIIverse. My name's Perry, and I will be your host today. Today's video is going to be that time of the month again, when what I do is I do a month-end review of my portfolio. Since yesterday was the last day of the month, it was time to do this again. But this is going to be actually pretty exciting. What we're going to do is basically have a different layout than I've ever had before. Let me talk to you face to face here. We're going to have a different layout than I've ever had before on my past month-end reviews, which has only been July and August, since my YouTube video is only 2 months old. But the reason I'm going to tell you that this one's going to be a lot more structured and laid out is that prior to me creating a YouTube video for over a year in my Blossom community, Blossom right here, Blossom community, I used to do month-end reviews of my entire portfolio, but because it was all written and structured in writing, I was able to summarize it into one post, just provide all the highlights and stuff and clean it up before I actually posted it. When I started YouTube, I was a noob. I didn't really know how to do videos. So when I did my first month-end review in July, I just put up the Snowball analytics page in my spreadsheet, and I just started talking and shooting from the hip. The problem with that is I noticed quite clearly myself, I was all over the map. I might have missed metrics because I was nervous and I was missing them, or I put it jumbled around and I was jumping back and forth. And then when I did August, that happened again. And I finally said to myself, Perry, if you got a YouTube video and you're going to be doing the same month-end review time in and time out, it's time to create a template. So what I decided to do, and September is going to be the new template for my month-end review. I have built it into a well-structured and oiled machine so that every month all I have to do is change the content, but it's all pre-structured, so I should not miss any metrics. For you, the viewer, you're going to get a much better presentation of my month-end review. Again, I want to be as transparent as possible on my PIIverse portfolio. So in order to do that, I want to make sure I'm not missing any metrics, so that anybody that's asking me, well, Perry, what about this metric and what about that metric? I'm hoping I pretty much captured it all, and basically you'll get the information you need. It's new, so I would really love to hear your comments, good or bad. Tell me what you think about this new layout, because this is the layout I want to use. And maybe, you know, based on your comments, if I do some tweaks for the next one. So that being said, let's get moving. And I'm excited, and I hope you enjoy this new format for my month in review. Alrighty. So as I said, this is the September 2025 month in review. I'm calling it the September SHAKEUP because September was a very busy month, an exciting month, because it was the months of big rebalances, and basically that equaled lower risk and strategic income growth. So the summary for September is September SHAKEUP, and I'm going to give you all the details of that as we move on over to the next slide, and let's get into the details for you. Okay. All right, so before I start, I have to do my notice to all viewers, my disclaimer for everybody. I am not a licensed or trained financial investment or tax expert. I'm just a retail investor with a passion for investing, sharing my experiences along my own investing journey. Viewers must not take any of my content, thoughts, or opinions in this video as financial advice. Do your own research and consider professional advice before investing. This content is for fun and entertainment only, and I'm hoping you're going to be educated, or if not that, at least entertained. So let's get on to the meat and potatoes. Okay, as I like doing on all my videos, because I'm a structured kind of guy, is I'd like to give you an agenda of what we're going to go through with my September month in review of my PIIverse portfolio. We're going to start with what's called the September portfolio highlights, and which is basically what were some of the exciting things that happened through the month. We're going to follow that by the September key month-end metrics. So the key elements and the key metrics of my portfolio that I'm going to be repeating time and time again. And hopefully it'll give you that kind of information that we can actually compare from month to month. Then we're going to follow with it, what I refer to it as looking under the hood of PIIverse. So once we got the metrics already presented to you, I'm going to take you into my Snowball Analytics site, and we're going to do some deep dives of some extra metrics, which I know a lot of people will find very interesting, but I wouldn't have considered them to be key elements. But I want to talk you through some of the deep dive things inside the guts of my PIIverse portfolio. Finally, we're going to talk about looking forward, what's coming up in the weeks ahead, and some final conclusions. Okay, so let's move on. So we're talking first about the September portfolio. Oops, and I got two O's there. Forgive me, I just noticed it. The portfolio highlights. Anyways, forgive my spelling. So we're going to start with September was a month of major portfolio shakeups. And let's just give you some details of what I did to my PIIverse portfolio that made some major changes to the way my portfolio has been matured. So what was the driver of doing this shakeup? And again, I don't just do it just because I enjoy doing it. And again, another spelling mistake, and forgive me there. The three primary goals. So everything I do when I do a shakeup is basically suited towards trying to accomplish one of my three goals for my strategy. So my first goal of my strategy is effectively maximize the income yield. And that was delivered with this shakeup. Secondly, continue to grow the average annual income, and that was delivered, and you'll see why. And thirdly, ensure portfolio sustainability through diversification, and that was clearly delivered as well. And you are going to see all those three goals being moved forward because of some of the changes that were made during the month of September. So let's talk about shakeup number one, which was the biggest one. It was actually one of the biggest ones I've ever done in my portfolio, other than creating it almost like 2 years ago. So it was so big that I actually created a YouTube video on this one. I'm going to give you a link above. If you look after I get to the bottom of this, I'm going to send you a link. And if you guys want to know more details about it, you can get into really deep dive, the guts of the thinking behind this shakeup. But generally, in a summary, what I did in this shakeup is I finally reduced my long-standing Roundhill QDTE and RDTE positions by 70%. That was a big change. What I did with the proceeds is I took those proceeds and I added new positions in 5 other ETFs. Under Roundhill, I added WPay and AVGW. Under Granite, I included YSPY and TQQY. And under Evolve, I added Biggie. So all the proceeds that came out of my QDTE and RDTE, which was a big overweighted positions in both of them, were actually made to make some major structural changes, which increased the amount of ETFs that I actually hold now because of what I did. Because I didn't get rid of the last 2, but in addition to those 2, I added 5 new positions, and that's why my portfolio has now gotten bigger in number of holdings. Roughly, the increase in monthly income was about $900. We'll know the true numbers later on, like as the months go by, but from my calculations based on last distributions, it should have increased my monthly distribution by another $900 a month. And again, as I said, there's the video. That's what it looks like. I'm going to tell you right now to look up and you're going to see the link. I'm also going to put it in the description of this video. So if you're looking for this, the link to this video and know the deep dive, please, I encourage you to take a look at it. It'll give you all the thinking behind this major shakeup, as well as some of the results in a much more granular way. So shakeup number 2. So shakeup number 2 is not a big one, and it's still just in its infancy. I haven't finished this one. I began another rebalancing process to close my Global X BKCL position. It is one that I've held for quite a long time. And basically the reason I actually decided, I have to thank Paul from Better Call Paul. He brought up the idea a few days ago that said, you know what? Instead of holding all this bank, why don't I move some of this bank into Canny, because they do have very similar kinds of positions. So what I decided is that, well, okay, you know what? I really like my bank position under Evolve, but I know that BKCL and bank are both very similar in nature. They both pay monthly, where Canny pays semi-monthly, or is it semi-monthly, I think is the word, twice a month. So, and bank actually has a higher yield than BKCL. So I made the decision to close out my BKCL, and it's only the starting. I just started with one position that I've closed in one account. But in October, I will actually complete this, and I will be moving the proceeds of BKCL into Canny, because Canny is a little bit of a broader spectrum than what bank and BKCL is. So it's including the banks and stuff like that, but other positions as well. And Canny offers a much higher yield, over 30%, whereas BKCL was only about 14%. So that was the reason for shakeup number 2. I will, because I just started this process on this shakeup, obviously my portfolio will not see the results of this until at least October, because the first distributions have not showed up on either way, with one being reduced and one being increased. I will start seeing the results of both these shakeup realignments in October. So September is the one that did all the work. October will be the month that gets rewarded for all the work up that I did in September. Roughly, the increase from this one is not as great. I'll see about a $240 increase roughly, but it's still $240 a month that I never had before. And I believe I'm actually being also more diversified, because Canny actually holds more underlyings than BKCL. So that's also, remember why I mentioned my 3 goals up above. This is basically meaning both diversification, increasing my yield, and increasing my yield growth. My annual income growth. So this shakeup, like the other one, delivered on all 3 of my goals as well. And finally, shakeup number 3. This is a biggie for me, and it's still in the process, because this is an ongoing shakeup. So it started in late August, but I'm calling it out in this month because this is when a lot of it did happen. I swung trade, so I did some swing trading. Sold 3 times in 3 occasions. I sold Athabasca at 613, 628, and 634. I was doing some major capitalizing, some big gains over my cost of $4.99, because Athabasca, if it entered into the low 6s, that was considered good. And so I figured that was a good time to do a swing trading. So I actually sold them 3 times. What I did is I've reduced my Athabasca position, which was my largest position in my portfolio. It was, I think, about 14% of my portfolio, much bigger than any of my other holdings. Reduced it from 31,800 shares down to 15,000 shares. Made some really good money on it. I believe I capitalized approximately 18,500 in gains in selling these shares. But the bad news is Athabasca decided that it wasn't finished swinging. So I actually had, like I said, it kept flying up. Athabasca currently, as we speak now, is in the 670, and it actually reached 680 range last week. So I'm sort of kicking myself that I thought Athabasca was finished swinging, and it was not finished swinging. If I would have just not swung and held on to it, I could have sold it for a lot more. And made even more gains. But again, the future, no one can tell the future. Basically, Athabasca has broken into a different pattern, and I'm trying to figure out what that pattern is. And because of that, I refuse to do any more swing selling. I mean, I could sell some right now and make even a bigger profit, but I don't know what direction Athabasca is going. If it's going to keep crawling up into the $7 range, I think I will still sell more if it ever reaches $7. But if it does, what I'm really looking for is I'm waiting for a swing buy opportunity. So I'm waiting for OPEC or all the geopolitical garbage that's going on to bring down the oil positions. And if that does, it'll bring down Athabasca temporarily. So I'm looking for a way of moving my money back into Athabasca so I can finish my swing cycle. So that was my big number 3, and what you're going to see the results of all 3 of these shakeups in the next page. Okay, so let's move on to the next page. So this is the structure I'm going to maintain from every month, and I'm going to show what the previous month's results were versus the end of current month. So this is end of previous month versus end of current month. And I want to go through all the key elements or the KPIs, whatever you want to call it. And it's like, I call this just the facts. So I don't know how many more metrics I can give you guys, but I'm going to give you these metrics, and these are the metrics I'm going to use every month. And I'm going to give you notes on why, what was interesting about each one of them. So we'll start with the first one, which is book nav. So my book nav at the end of August was 1.847 million. And as of yesterday, it was 1.862 million. So basically I increased my book nav 15K. And if I did that, it's because I reinvested 15K of my monthly distribution. So 15K brought up my book value. Now, book value, when I'm looking at this, includes my cash position. So that, just want to make sure that you know. So net, my entire portfolio, cash and investments, has moved up 15K. And again, that was reinvestments from the distributions from the previous weeks that were built up and then bought into. Okay, the next one is my period end current NAV unrealized profits or losses. So at the end of August, my current NAV for my entire portfolio, cash and investments, was 1.561 million. Which at the time in August meant that I was in a 16% unrealized loss position with my against book value. But in current month, lots has happened, and I'm currently at 1.658 million, meaning I have reduced my unrealized loss, and this is why it's called unrealized. It's now been dropped from 16% to 11%. That's attributed to wild upswings in the market. But not only wild upswings in the market, but particularly to my portfolio, big rises in Athabasca, as I've already been telling you. From September, it rose almost a complete dollar, and I have a lot of shares in it, as well as some other key holdings. The one that really stood out is I really lucked out, people. I bought HOOW from Roundhill in the first week of September. And that was a Friday. The Monday, Robinhood decided that they were going to be included into the S&P. And my HOOW that I bought at $59 jumped $10 in one trading day. So I went up $10 in one day, and HOOW has not stopped since. It's now, I think, around $75. So my position in HOOW, I can't remember the exact number. We'll get into the details when you look at my Snowball analytics, but it is clearly up big time in NAV appreciation, more so than it is in any kind of distributions, because I've only had it for a month. So major gains here. But again, because I'm an income investor, I'm not selling these ones yet because I don't have a big position in it. So I'm just going to hold on to it right now. I don't want to capitalize or trim my gains on this one because I really like this one. It's just going to give me more room in case it does slide down. I'll still be in a positive NAV position. My cash positions, and this is where you can see the impacts of me doing my Athabasca swing sells. At the end of August, my cash position was at 83,000. It was already there because my first of my Athabasca sales happened just before the end of the month last month. So it's at 83,000. Just to give you guys an idea, normally my cash position on my portfolio is never over. It's usually under 10,000. The only reason it'll go up to about 20 or 25,000 is because my distributions are building up. And then when I reach a sort of trigger of about 20,000, I will then sell off, or not sell, I will then do some major reinvestment, and I'll bring my cash position back down under 10, usually around 5 or 7,000. I'm in a very unusual position because not only is it at 83,000 at the end of August, but as the end of yesterday, end of month September, I am now at a cash position of 140,000 because I did 2 more Athabasca swing sells, thinking that I was at the top of it and waiting for me to reinvest it. I hold that cash, and in swing trading, I'm waiting for Athabasca to drop back down so I could buy back in at a lower price. That's just not happening. And I'm going to have to start making some thoughts because I do not like sitting on $140,000 of cash because that cash is generating no income. So I don't know what I'm going to do. I might have to do a rare thing and actually buy an income ETF in my non-registered because my Athabasca sits in my non-registered. So my cash is not in a RIF or something where I can just say, oh, you know what? I'll just move it into here until Athabasca decides it's going to have a slowdown. So I haven't decided. I should actually put that in my thinking for next month, but that is becoming a little bit of a concern. It's just sitting too much money doing nothing. Okay, distributions month end. So at the end of August, my distributions were a record-setting $52,431. The yield at that time was 38.57. I threw that in there as well. At the end of September, yesterday, my closing out distributions for September was 41,776, and I'm still running at around a 38 to 38.3% yield. So nothing has really changed on my yield. My yield's still settling at a very stable 38%. The reason, if somebody's asking, wow, Perry, holy crow, you just lost, you dropped your distributions by $11,000. No, that's not what happened. August distribution was much higher because August was one of those rare 5-month weeks. And a lot of my weekly payers pay obviously every week, and they were allowed to pay a 5th week. So you're basically seeing August being a 5-week month. If I actually extrapolated it and recalculated it and actually removed the money out of the 5th week, it would have August would have been approximately a 41.9K month, which is actually about exactly the same as September's was. Okay. The next number here is ROI and IRR. I'm showing both these numbers because some people want to know one number and some people want to know the other number. My ROI for the month of end of August was 30.8, and a part of good September increases, my current return on investment in the end of month of yesterday for September is now 36%. So I've increased my ROI 6%. A lot of that is because of the significant increase in my portfolio's NAV. The IRR for both of them are 21.2 and 24.3. And again, a lot of that is attributed to the significant NAV increase on several of my positions. The next one is my 12-month projected monthly income. And so this is projected, meaning it's estimated based on all the latest distributions it knows. As of the end of August, my average was 48K. My average now, with all the rebalancing that's happening, my projection is 48.7K, or an increase of about $650. That's because of the rebalance activities. So it is moving up, and again, meeting my goals of saying I always want to try to increase my average annual income. Portfolio holding details. So as at end of August, I held 30 holdings. 3 of them are stocks, pure growth stocks. 27 of them were covered call ETFs. And at the end of August, the top 3 ETFs with, not including stocks, just looking at ETFs. The top 3 ETFs in total return, or ROI, were call, PLTE, and HDIV, with respective 66% ROI, 57% ROI, and 54% ROI. And again, for those that don't know ROI, it is the makeup of both the NAV appreciation and the distributions that they have paid to date. September, there was a little bit of a switch out. PLTE over the month of September took over from call, and now PLTE is at 79% as of the end of September. Call is at 65%, so it dropped just a little bit, and HDIV is moved up in the world to 61%. So that little engine that could, HDIV from Hamilton and call, these are 2 cover call ETFs that never get too much attention, especially call, but they are rock stars when it comes to total return on investments. They have been on the top 5 list of my portfolio as long as I can remember. So if you're looking for something that's extremely stable, has growth and income, two of these for sure. PLTE is only 8 months old. But look at what I've accomplished on my holding in 8 months with a 79% ROI on about an 8-month-old holding of PLTE. All right. And finally, and these are numbers that people never talk about, but they're absolutely critical if you are looking at a portfolio not only that maintains ROI, but if you want a portfolio that's going to be sustainable for as long as you're going to live, you want to know how risk averse it is, how volatile it is, and basically what its risk reward ratio is. And there are two metrics here that people don't talk enough about. One of them is called the volatility or the beta metric, and the other one is called the Sortino ratio. The beta metric or the volatility metric is basically the way they turn around for beta is if you're one is considered average market volatility. Something like an S&P, but they don't actually say S&P, but I think they sort of mean it. Its general market volatility is deemed a 1. Anything below 1 is considered to be a lot more stable, a lot less volatile. It doesn't swing in different directions as easy. So the lower you go below 1, the better. As of the end of August, I was at a 0.281, which is already extremely low. You can see underneath the average is supposed to be 1. As of the end of September, that number went even lower. So my volatility or my beta on my portfolio has now dropped even from 0.281 to 0.185. That's not a shocker to happen because one of the major factors that causes volatility to drop is increase in diversification. And because I've actually increased my portfolio from, as you saw up above, to 38 ETFs from 30 ETFs in stocks, that obviously impacts volatility because you now have 8 more holdings that will help neutralize or balance or quell volatility. So that's not a shocker that it dropped. That absolutely makes a lot of sense. When it comes to the Sortino ratio, this was the one which is really the one that says, considering how much risk you're taking, how much return are you getting from your ETF or your stock, or in the case of my entire portfolio. So the Snowball Analytics actually does the analysis of your entire portfolio and gives you the Sortino ratio of that. Just to give you a perspective, and you can see the number for the S&P is always used as a benchmark. The S&P was at 1.89 in August. The common thinking is that any Sortino ratio over 2 is considered good. So the S&P in both months, last month and this month, is still under what's considered good, but almost at good. So we'll just call it good because they're very close. But the part that I want to pull out is that my PIIverse portfolio is at a whopping 13.2 as of August, and it has now increased to 15.149. So not only am I basically protected against high volatility, my risk reward ratio on my portfolio has grown even bigger, and I'm now at a 15.149. Again, major reason there is increase in diversification, also increase in higher yielding ETFs. So both of those meant that the reward went higher and the risk went lower. So that's why it moved up from already a whopping 13 points to a 15.149. And the S&P increased by 0.05. So it didn't basically change at all. All right. So those are my September key month-end results. And we're going to go through these next month exactly the same way. I'm just going to move current month to previous month, and then we'll add the new month. So let's move on. All right, so let's start looking under the hood of the PIIverse world. So what we want to do is I'm going to be using my Snowball Analytics to take a look under the hood of my portfolio. And these are the details that were talked about briefly, but not really shown in detail, or they weren't shown at all. But there's some definitely details that I know a lot of income and growth investors will want to see. So I really want to show them up and basically help you get a better perspective to be, again, more transparent. So Again, for those that don't know what Snowball Analytics is, it's a website I use or a service I use for my portfolio tracking. I find it, I've had it for almost 2 years. It's very valuable to me. I don't have any sponsorship, so I'm not doing this because I'm sponsored. But if you're interested in Snowball Analytics, there's a free trial to it. If you really like it, there is a refer a friend that anyone that is a member of Snowball Analytics. If you use our code, we get sort of an extra free month for anybody that decides to use our code. So if you are going to subscribe, you get 10% discount and I get a free month. So take a look at that. I will put it in the description if anyone's interested in Snowball Analytics, as well as in the comments. So let's go on. So the first thing I want to show you guys is diversification. And this is under the Snowball Analytics diversification page. So what I'm going to first tell you what I'm going to show you, and then I'm going to actually show you. So after September, my portfolio increased diversifications to 35 holdings. Plus, it's now 38, but it was 35. I've already increased since then. My cash temporary top hold is my temporary top holding. And again, that was because of my Athabasca swing cycle, but HHIS is now my top holding, and I'll show you that. So let's go there, and I'm going to flip over there so I can show you that. Okay, so here we are. Matter of fact, what I'm going to do is I'm just going to talk. I'm going to stay in Snowball, and I'm going to watch my own page on what I want to show you as highlights. And then you can see it later on when I'm finished this page. So this is the diversification page. You could see, and I'm going to leave it up for, as we're talking, because some people keep on asking me, what are my holdings? What are my holdings? How much am I holding? This page right here, if you freeze frame your video, this is my entire portfolio, everything, including my cash positions, all my ETFs, and my 3 stocks. Again, as I mentioned already on the PowerPoint slide, cash is my biggest position, and I've already explained why, and I'm hoping I'm going to bring that back down to 0.04 sometime soon. HHIS is currently my largest position at 6.31, followed by ENCL and Coney. Then it moves down from there, and I'm not going to say much more in there. And you can see this. Now, the neat thing here, this is buy-in. If I want to say, no, don't show me buy-in, show me current, I can just click here, and it actually shows me what the positions are if I wanted current as opposed to what my buy-in position was. All right. Now, another thing they've added here, and I'm still getting used to it, but this has some potential. They've added this new feature here called X-ray funds. What it does is, and I thought it worked the way I liked it at first, but now it seems like it's changed. So I'm going to call Snowball support. But what this does, it actually looks inside your ETFs and shows your holding layout, which I think is really fascinating. I'm just going to give you a quick example here. So for example, if I said, show me all the ETFs that are using coin, I click here and it says, oh, okay. Well, in your holdings, you got CYNE that holds 79% of all coin positions. 14% is under LFGY. COIW has 4.2% of all the coin positions, and BLOX actually has 1.9. I can see this as being very helpful when you're doing diversification and you want to say, wow, look, I got too much coin or I got more. It's really going to be nice to have this one. I think they're still working on it, but I would like to do it so I could click on the ETF and it shows me the positions in the other direction. This sort of does it the other way around. It says, here is the underlying and who's using it is the way. But I see some good potential with this one. So anyways, I just wanted to show you it's a new feature with Snowball Analytics, and I'm going to keep my eyes open for that one. Okay, so the next thing that we're going to talk about is distributions, and I'm not going to go to the screen to show you this, but I'm going to go right to what it's saying. So let me get over there. So under distributions, I just want to show you a few metrics here. There was a significant change in my monthly results from trailing 12 months to projected after September, and I want to show you that here. So over here, you could see, and it's under both ones here. So this is showing that actually I did have a 45K monthly position, and it did erode down when the whole tariff thing happened. And actually I got down during that Liberation Day, quote unquote, where basically my distributions, all the markets collapsed there for that several times. We all know what happened there. With regards to my portfolio and high yield income portfolios like mine, you obviously are going to see not only your NAV go down, but obviously the monthly distributions will lower as well. So you could see in March and April that my numbers went down to 34K. And again, that's why my strategy says that I do 3 times expenses, because I basically have a portfolio that even when we have really bad months, and again, that was bad, but I could go even way worse and actually have monthly distributions that say 25K and stay that way for several months, because my expenses are only a minimum of 10K. So this was an example of showing what happens when a bad market days have happened. But then after that, things started getting better. May went to 49K, but that's actually an exception because it, similar to August, was a 5-week month. It would have normally been around 39K. And then it went to 30 or 38K. And then you could see, and I hate that this thing keeps going here. I'm going to keep my arrow below it. What you're going to see is a trend of 34, 38, 36, 38. Then it moves to 52, which I told you is actually 41 if it was a 4-week cycle. And then September ended up being 42. So the good news, and you cannot see it that clearly, maybe you could see it here, is that there is a trend moving up of my monthly distributions are slowly growing. And that's the great news. And that's one of my 3 primary goals, is to have my income grow every month. All right. Another thing you can see here, just want to see some more metrics. And again, if you guys want details, just press freeze and then you can look at my dividends received since inception. Even though Coney is down 67% in my portfolio, it still produces income. It basically, you can see it's already produced over 91,000. I think it's 91,000. Yeah, 90,400. My total invested is 101,000. So it's only about 10,000 away from what I refer to as house money. And that means that it will have paid me back every penny I invested in it. And then it keeps going. So for anybody that says that cover call ETFs just pay you, give you your money back and pay you your money back, I really don't understand how they come up to that logic, considering in a few months I will actually reach house money and Coney will still keep paying me after that. And I'll still have a NAV position, even if it's 35%. So I don't know exactly how the ETF only is paying my money back when I've actually gotten all my money back already. So just keep that in mind for those that keep saying that. Anyways, so these are all my positions here. The one I want to show you here is my projected. So where you saw that my projected was only about 41, 42 before August, now you can see it's actually going up. So October is 52 only because it's another 5-weeker, but you can see here it's going to be 46, 50, 48, 47. So what you've noticed is because of all my rebalancing work in September, my monthly average has now moved up to 48,000 from what it was before September, which was around 41 or 42,000. So it is moving up based on projections, and that is great news to see. Is that I'm slowly moving up my average monthly distributions. Okay, so now we move into another one, and this is going to be the one that talks about growth of my portfolio. So for all of those growth investors that want to know, okay, Perry, nice about your distributions, you're getting paid a lot of money, fine. But show me the money. Show me what I'm interested in as a growth investor. Show me how you're keeping up to the S&P and stuff like that. So let's do that. I'm going to show you that. I've just got to read my numbers here. Okay, so I'm going to move over to my next page, which is my growth page. And I've got some good news to present here as well. So here is my portfolio value since inception. This you can see over here, from here to about here was the building stage. I always say that November, December of 2023 was when my portfolio was finished being built and was moved into cruise control mode, whereas basically it's as if it's been running for several years. This is the point where it just does its normal care and feeding and growing on its own. So since around here, this is about, you can see where it clearly is different. what I want to show you, the dotted line, the little dotted purple line, is actually the book value. Now, the book value in this chart does not include cash. So if I'm sitting on a large cash position, which I am right now, and it's not common, you could see over here, and I hate this guy's in the way, but you can see over here where it's dropped down dramatically, down to where it says it's at a 1.72 book value. That's invested holdings, not cash. You'd have to add my cash in it, and that's why that it's not 1.86, whatever number I gave you before. This is only holdings invested. So most of the time my book value is going up because I'm always reinvesting. So you can look at that dotted line and it's always going up. The part that I really want to show for those people that says that, yeah, you're getting all this money, Perry, but you're going to eventually nav erode. You're going to erode to nothing. Well, this is the S&P compared to my portfolio. And of course, all things in, this is what I'm doing. And you can see that basically even over here I was pretty flat, but even over here at point where the gap got pretty big between the two of them, 1.5 versus 1.3, the good news is in 2025, it has been slowly decreasing the gap to the point that the S&P and my portfolio were almost neck and neck. And again, I hate this. I know this bakes the noodles of a lot of pure growth investors, but I really don't even care if it's keeping up to the S&P. I'd be totally happy if you took that blue line of mine and it went straight across. As long as it stayed stable to me means flat. If it's growing and keeping up with the S&P, even if it's lagging behind by a little bit, I'm not worried because I'm not trying to chase the S&P for NAV growth. I'm generating income. So in addition to everything here is showing, oh yeah, well look at the S&P is ahead of the portfolio. But what a lot of people are forgetting is at that same time, I was pulling out about $8,000 or $9,000 a month in all of 2025. And in 2024, I was actually pulling out a lot more because we were doing some major renos. So in addition to me keeping up with the S&P, I'm also actually tracking. I'm also doing it while I'm actually paying my bills and having an enjoyable retirement and actually generating so much monthly income that I can reinvest a lot of it back and keep my portfolio growing during my retirement. So that's the important part because when you're retired, they always talk about meltdown strategies of which your portfolio will slowly erode because in a growth portfolio, you have to sell those assets in order to generate cash to live on. Well, look at mine. I've been retired since right here. And do you see that my portfolio is eroding? I'm going to tell you another thing. I do not put any new cash into my portfolio. It is self-funded. So the way it's running right now, it does not take any cash from outside sources. This is doing what it's doing, paying out my cash into my pocket and actually growing in value at the same time. So that is what I want to see. And again, people a lot of times from the other side don't take even notice of this because that's an important number. The other thing that people are going to want to know is my return on investment. So this is my performance. I'm going to put it against the S&P again. And again, you could see here, at times I actually was beating it during the building phase. From 2024 all the way into 2025, the S&P's ROI was actually starting to I was lagging behind, pardon me. I was lagging behind the S&P where it was at 41% and I was at 29%. But since 2025 and since a lot of rebalancing work that I've been doing all throughout the summer, you can see that lag is closing. So this is what I want to also point out is that a NAV lag doesn't just have to keep going down. It can actually be closed and actually closing positions. So now, whereas now the S&P is still at 42%, I'm now at 38% return on investment. So I'm actually catching up to the S&P again while I'm paying out money every month. Currently, it's around $9,000 a month is leaving my account every month to pay my bills. And yet I'm still keeping up on my ROI to the S&P. And the numbers speak for themselves. It is what it is. It's 42% for the S&P as of this week, and 39% for me. Okay. The other thing I want to point out here, because a lot of people want to know some metrics of the cover of the various ETFs. I'm trying to make this so I can make it as close as possible. So freeze your screen if you want, but this is all my ETFs and what each one of their current ROI is. Again, ROI being their NAV appreciation, as well as how much distributions they've collected. So this is their total ROI. PLTE has now become the clear leader. And again, it's the clear leader on capital appreciation more so than distributions, because as I told you, PLTE is only about 10 months old. So you can see here, and I've put the black box up, you can see it right there. It's only given out $3,000 in distributions, but it has actually had capital gains of $9,800. As well as unrealized. So realized at 4,000, total capital gains of 8,800. I actually did do some trimming of PLTE to buy something else. So that's why you see both a capital gains and a capital gains and realized, because I actually sold out a major part of it because I was up to over 90% capital appreciation, and I actually wanted to trim some of those gains out. And then I still hold a lot of it. So basically that the unrealized part is in there as well. All right. So sorry, the capital gains is the 8,800. The realized portion of it is 4,100. And that's the part I actually cashed out for profits. The other thing you'll see here, I wanted to point out, and you guys, if you guys are looking at any of the other ones, Call has been one of the troopers. He only pays around 12% yield, but he's always been either on the top or number two, mostly number one. But he's a sleeper. He only does about 12% yield, but he's definitely always delivered for me. Again, timing is always a factor. I bought him at a good price, so I have that helped me a lot. The other one I want to point out here as a highlight, because everyone picks on it and says, oh yeah, let's look at that Coney that you're talking about. Like there's an erosion monster. All 2025, it has been eroding. And again, my NAV is down, I think 67%, and I'll know for sure right now. Look at where Coney is sitting right now. This is Coney sitting right here in the middle of the pack. Even though it's down $65,000, you can see here capital gains is minus $65,000, but it is currently up with a total ROI of 25%. This is again a guy that's down 65% in capital gains, but it's generated so much income over the 2 years I've held it that I'm still sitting at an ROI of 25%, and that's on Coney, which is currently the 2025, another one of the 2025 few that are doing erosion right now. It has stabilized. I think they're starting to clean some things up. I don't know what they've been doing, but Coney has been sort of relatively stable lately, but it could also just be because the markets are up. Anyways, I just wanted to show you this. These are on my loser side. The reason you see AVGW down here is because it's brand new. It has almost generated no income and it's down a little. So it's an easy target for it to actually be in the minuses because it hasn't yet generated the income, which overall in the grand scheme of things, if I've held AVGW for a year, it would be up in the positives as well because it's always capitalizing income. So it keeps building and building and it keeps crawling up the ladder as it generates more income. USOI is my poster child NAV eroder. If you watched my video a week ago, I still don't know what to do with it, but it's actually one of the few ETF. It is the only ETF that truly is been in a loss position out of all my ETFs. It's the only one. I know AVG will fix themselves in about one distribution, so that's not a problem. But USOI is one of my only ETFs that actually is in the negatives. And come on, let's go, boys and girls. Let's see here. When I'm talking about this many ETFs in my portfolio, and that the only two ETFs are one that's brand new and hasn't done distributions, and one that basically is currently a loser, that's not a bad record to have 2 out of 30 that are here, and all of them have really good returns. Okay. So I think that's it for this one. And I'm hoping that you again, screen save it or whatever you want if you want to read more details. All right. The other thing I want to talk about is my risk return metrics. I'm just going to go through it really quickly here. And I'll go over here under metrics. And again, I showed this to you already. Some of these metrics I don't use, but here's the volatility beta metric which I talked about already. Markets are always deemed to be 1, and you can see that my portfolio is way down here at 1.185. That means it's significantly lower than the markets on volatility. You want to hear that if you have a portfolio that you are below the markets on volatility, because it's almost like saying, I mean, I would say a GIC would be one of the few things you'd be down here for a GIC. So we are really close to what I would call very stable. And my entire portfolio is almost deemed close down to a GIC. And again, it isn't. And some people go, oh, don't call it a GIC. What I'm saying is I'm down in the range where you can almost call it fixed income. And that's an entire portfolio that generates 38% yield. And I'm having a volatility that's very stable. And again, over here, you can see the guy's waving because he's happy. The S&P is currently at 1.959. It basically says a Sortino ratio. I think it was over here. Where did it turn around and say? Somewhere it says it was, if it's considered 2, it's good. Oh, here. Sortino value over 2 is considered good. So the S&P is almost good. It's at 1.95. And again, I've moved up from 13 to 15 on my Sortino ratio. So that's it. Okay. So that was a lot of talking. Again, if somebody didn't want to care about under the hood, they could have just skipped this section. But I know there's a lot of people that are interested. All right, so let's get back to the PowerPoint and we'll do the last one. And I'm just going to show this here for those people that this is what I was tracking as I was showing you the Snowball Analytics details. So let me just leave it on this page for a second so you can sort of see the highlights I was talking about. It gives me a chance to actually rest my voice. And there you go. So you screen save it. All right, so let's move on to the final things. Looking forward and conclusions. So first, looking forward. As I said in the previous slide, October's distribution will break 50K milestone again. But that's only because October is another 5-week month. But I will likely be breaking 50K in the month of October. I will be completing my rebalance of the BKCL ETF, as I already talked about earlier, and moving those proceeds and closing my BKCL position, which I'm a little sad at because I've had BKCL almost for 2 years as well. But that position is going to be closed because bank and BKCL were very much the same. And so I'm basically closing one side of it. The other thing is I'm going to continue to reinvest my excess distributions. That is a normal cycle that I do. When I get up to a number that is high enough, I then turn around and look for some deals. I'll tell you right now, and it'll actually be in next month. I actually pulled the trigger today on a recent harvest release of 4 new ETFs. And one of them was an underlying I've never had before, which is Reddit. It also dove from $12 right at market opening down into under 10. And for me, that was like, good deal. I know Reddit's under pressure because of some market news, but I wanted to take advantage of that one. So I actually did some reinvesting actually this morning, and I bought 800 units of Reddit's. I think it's RDDY. And that I'm sure is going to be included eventually into the HHIS all-in-one, but nobody's said anything yet, so I suspect it will be because it is basically a new ETF that the all-in-one is supposed to hold, so we'll see what Harvest does with that. And then the other thing is I will continually analyze my PIIverse portfolio spreadsheet, one I didn't show you here at all, to look for any other opportunities to progress my goals further. So anything where I say, oh, okay, here, there's another rebalancing way I can actually add a little tweak here, add another 300, another 900. So I'm always looking for that, looking forward. And I will tell you at the end of October if there were some new opportunities I never noticed when I was talking to you right now. All right, so conclusions. With videos like this, I cannot be more transparent with my cover call ETF high yield income portfolio. I don't know how much more I can actually make my entire portfolio transparent. I know people will try to find another metric. Again, the ones that are disbelievers, not the people that believe in income portfolios, but those that don't believe in them and don't believe in cover call ETFs. I don't know how much more I could be transparent, and I'm hoping this helps. For those that actually believe in cover call ETFs and believe in income portfolios, I'm hoping this helps inspire you to know that a good, well-designed portfolio is not only going to provide some really good income, but it's also sustainable. Like you can quite clearly see that my volatility is down. My risk reward ratio is up. I basically have a portfolio that can not only generate more income than I need that I could use for reinvesting, but I can also see that this is a portfolio that will sustain itself for decades to come. All right. But please leave me some comments on what you thought of this video format, the good and the bad. You can tell me that I talk too much because I already know I do. But also, what did you think of the structure, the format, and what did you think about the month in review for September for my portfolio? And if you have any questions, please tell me. All right. Until next time, though, stay safe, stay investing, and I'm going to see you in the PIIverse.